Hello, everyone. My name is Drew Dosek, and welcome to Trading the Close. Today, we return to summer float mode, light volume, plus a couple stocks that really pushed higher on earnings, really pushed the markets up today, really recapturing what was lost yesterday and then some. But we've got some great analysis with that trend line I showed you intraday yesterday on the SPX that we're going to show you it didn't get above today. All right, so let's first jump into the market summary and check out what's going on in the general markets themselves. Dow Jones up 0.15%, NASDAQ up 1.26%, S&P 500 up 0.74%. U.S. oil continues to break down that bull flag now triggering, or pardon me, bear flag now triggering, down 1.64%. Gold down 0.3%, and Bitcoin recovering pretty nicely, up almost 1%. So let's jump into the S&P 500 heat map and take a look at where and what stocks are moving today. As we see here, a big mover here on Apple, up 5%. We'll get into the reasons why here in a little bit and when we look into that chart, but great move up on Apple, really elevating the markets, the Qs, the S&P 500. AVGO also up 2.88%, Amazon up 4%, and Walmart making a nice push as well, up 4.22%, and Tesla making a nice recovery as well, up 3.54%. One of the big boys, though, down ever so slightly, with Microsoft at down 0.57%. So let's jump in the S&P 500. As I said, we really recovered everything we lost yesterday, but that really doesn't change this pattern. This pattern, folks, is all inside bar bearish consolidation. We tagged resistance, moved down. Now we're chopping sideways. If you were to invert this pattern, it would look very much like a flagpole with a flag hanging down at the side. And that's what that bear flag means right here. So far, it's still bearish. And what I meant about that intraday trend line, look right here. We can see here when we did break trend yesterday that we did go and attack it again today, but we didn't establish ourselves back above that trend line. So that tells me we're still looking for potentially more downside in the near to midterm, at least off this near-term trend that you see here on the S&P 500. Makes sense with the bear flag forming up here on the charts for support here, 6146, followed by 6051. All right, into the Qs. Now, the Qs made a nice push. As we said, Apple was up over 5% today. That really did push the Qs back up above this inclining trend line. Remarkable recovery. Notice yesterday we did get rejected at that trend line. Now we're starting to poke above. We'll see if we can have a continued move tomorrow and confirm back above this trend line that failed not that long ago. So this is really interesting price action. Ultimately, though, still bear flag pattern on the chart at the top of the charts too, which can be very powerful signals for a movement down. Now the SMH, you can see here we did push up a little bit, but we didn't recapture any of what yesterday's price action lost. So right now we're just trading here, about to close at 286.54. Ultimately, still bear flag consolidation. Now keep in mind, folks, when I say bear flag, it is that pattern, but these sort of consolidating moves need more time to mature before they do start triggering and falling down lower. Oil is an exaggeration of that maturity, and we'll get into that chart here in a moment. So as you see there with SMH right there, mainly just trading slightly lower than where we closed yesterday. It tried to regain strength, but this, guys, is a leading indicator. The Qs and the SPY are pushing up higher from their decline, and SMH is not. And the SMH is, like I said, a leading indicator, which often implies weaker forward momentum, potentially breaking down to support at 265 there on the charts. Now, the IWM today, it really didn't do too much, not too much change from yesterday. No confirmation. So that's the bad news. The good news is we're still maintaining above this declining trend line. So that kicks the can into tomorrow. Let's see if we get a push up above 221.26. That will then make this area more solid of a support and have a nice continuing move on the IWM. Next up, Bitcoin. You can see here Bitcoin has finally gathered some strength from this inclining trend line of support. And one thing I wanted to show you guys too is a little learning lesson. The simple moving averages are one of the indicators that I like to use when I'm evaluating longer term moves on stocks. And look at this. And also it works on cryptocurrency too. You can also notice this blue line that just appeared here on the screen. That's the 50-day simple moving average on close. Notice where the lows occurred most recently here on Bitcoin. We had a move from consolidation and we broke the 20 moving average, which is this yellow trend line moving up through price. And then we came straight down, slammed into the 50 moving average, and have gotten a bounce. That's how these averages work. That's how you would anticipate a reaction from a fall like this on Bitcoin or any chart for that matter. That's why technical analysis is so powerful. We can apply it to crypto, to stocks, to commodities, you name it. If I can have a chart that charts pricing, I can find a pattern that could put you in the profitable side of a trade. So very interesting price action there on Bitcoin, especially with the SMAs thrown up on the screen. So now we see ultimately though, Bitcoin's fallen down, had a nice bounce up, but this is still bearish consolidation. So I want to see if Bitcoin does end up holding these gains or in the near term starts breaking down. As I've said, I've got support down here right around 108,000 on the chart, which is this declining trend line from the most recent breakout that happened, pushing Bitcoin to brand new all-time highs. I think that has to do a full retest and a very nice move though on Bitcoin. Next up, we've got gold. Gold, very similar to IWM. There's really not much that has changed from yesterday. We just basically have been trading sideways. We'll see if we put in more consolidation in this area. That would imply a weakening of this top end trend line that could propel the price on gold up higher. So ultimately though, not much new to report there on gold today. We'll check it out tomorrow. Next up, silver. Silver also closing basically with a doji candle right here. Got a great bounce off the first support. I do anticipate silver to fall down a little bit more, potentially here to 34.86. That will likely garner a bigger bounce up on the chart of silver, but still great move here on silver. This is the darling, in my opinion, of the metals in the most recent moves on the charts. Here is next up, U.S. oil. As I've said, U.S. oil was beginning to break down underneath this major red candle pivot. And we can see here prices is really closed right on that pivot low. So hasn't yet fully triggered this breakdown, but it's getting closer and closer after these last 5 trading days, pulling price down on U.S. oil. Ultimately, this is a bear flag, should pull price back down to this declining trend line, roughly right around $59.50. Next up, nat gas. Nat gas saw a continued bounce from this declining trend line right here. Great move for it to save itself from falling down here to the $2.55 area. Next resistance is this inclining trend line right here at $3.22. Next up, we've got the dollar. The dollar, big news today. We noted the last couple days, we were consolidating right here on top of this inverse head and shoulders pattern for a measured move up here to 101.41. Now that's taken off. Price now has since retreated behind and under this neckline. That gives the next support of the dollar down here at $97.69. And since this is now a failed move, we could actually be going lower on the dollar down to 97 or potentially $96. And that could not bode well, especially if tariffs increase. That will make our dollar go less distances when buying products from foreign countries. So we'll have to monitor this. A stronger dollar will allow our dollar to go further in buying those products in foreign countries. So a big dip, that's not necessarily good, especially when we're starting to apply tariffs across the world. Next up, Apple. Apple, as you see here, great move up over 5% today, pushed higher 5.1%. That was on the back of news that Tim Cook declared that they were going to invest $100 billion in the United States for manufacturing and R&D. This now puts the total at $600 billion to be invested by Apple into the United States over the next 4 years. They've even got a factory being produced for AI, an AI warehouse, a data center in Texas. So great investments for the United States, and also investors really liked it, as you can see, pushing price up here into resistance where all this chop currently is located. But look further out on the chart. I've got a declining trend line that you see here from the top end that is coming down, that has only been hit twice. So that tells me the next hit is going to be a very solid rejection if Apple does push up higher. We're talking about roughly $220. So it's not that far away, only $7 away on the chart here, and we likely will start facing some very stiff resistance for Apple. And the thing is, guys, is that's what the charts show me. But if Apple breaks through and goes through that trend line and confirms, that just shows the strength behind Apple's move. So this is very critical to watch what happens at this interaction of the trend line, as the probabilities state that we should be getting rejected at that area. But it gives us a ton of data and info if we don't get rejected there. So we'll be keeping our eyes on Apple to see what happens. Next up, SMCI. Now, SMCI reported poor earnings. Their share of revenue in this space is actually shrinking up a little bit. Plus, they've got a cloud over them. They've got a potential allegation of two individuals associated with a company called ALX that are Chinese national citizens. Those individuals were arrested recently for a sale and selling chips to China through other countries in Asia. One of those companies that has distributed these NVIDIA chips is SMCI to ALX, to the tune of over $25 million in chips back in 2023. So they may be on the target for crosshairs for the DOJ to investigate. Watch out on SMCI. It's got some negative news on it and surrounded it. We'll see where these allegations pan out at. Right now, they're just allegations. No statement has come from SMCI. So we'll need to see if these are actually true situations that have happened in SMCI. If so, I see SMCI coming a lot lower. First support here at 41.61. And quite honestly, if they're tied up in this, you know what? This is a no-touch stock for me, because price will likely start collapsing if news develops even worse for SMCI. Now, contrary to that, you may have a great bounce opportunity if they can get themselves out of this story. If they legitimately are following the exporting rules of the United States, we can have a big bounce. So there's nothing really changed about SMCI. It's a volatile stock. It can move a whole bunch, but you have to time it correctly, and you have to be aware of what's going on to make sure that you're not caught on the wrong side of a trade. Next up, we've got ANET. You see ANET here. Big, huge pop today off of earnings. Beautiful double beat earnings per share 12.44%, and also revenue by 4.63%. But look where price is headed right now. Look at this on this longer term chart. You can see on the weekly chart, we've got a trend line coming all the way back from 2018, connected through the pivot here in January of 2025, and that's where price is at. But please note, this is all-time high territory, so we're in price discovery mode. This is the next major resistance for ANET that it didn't actually hit today. It kissed it. It's so close to that trend line. I anticipate likely more consolidation or a rejection once price pierces or touches this trend line. The first area of support is all the way down here at 120.63. That's the danger of stocks that move vertically on the chart. Whenever you have a really sharp up move, it likely is met with a very sharp down move. So you want to see, if you're a bull, you want to see stocks move up, consolidate, move up, consolidate, move up, consolidate. They have better staying power than a move like this, where when it does start to correct, a lot of investors head for the exit and can send that stock price way down low, with the first support, as I said, down here at 120.63. The next major support will be on this inclining trend line, roughly around $111. All right, next up, we've got Snap. Snap, as you see here, did also report earnings. They did miss, had a double miss on earnings, down 3.53% on EPS and 0.38% on revenue, and the stock reacted. Look at that huge plunge that we saw on this charts today, down 17.15%. However, it did have a nice recovery. We're not trading near the lows down here. And in addition, we didn't even tag this major level of support. Investors were eager to get in before that level of support hit, and then sent the price of the stock back up into this pivot area to close the day. So if we continue moving higher off of the sell-off, the next resistance is going to be at this declining trend line, roughly at $8.47. But just note where this long-term trend line is coming from. This is back here from 2018, guys. So 2018 all the way over to these pivots that occurred in April, and then you can see price reacted and had a great bounce. We're talking about lows of the charts. If we break this trend line, the next support will be a double bottom right here, the April 8th double bottom. So keep that in mind. Great bounce up, though, to close the day on Snap, regardless if it's down 17%. Next up, we've got JOBY. JOBY, as you see here, it did report earnings, it does report earnings today after the bell. So we'll see, and likely price actions already moving down to $18.25, but we can anticipate a reason why that move is occurring. One, we're overbought down here on the RSI. Two, we've ran straight into this longer term inclining trend line off of news of JOBY acquiring a company called Blade. And investors were really excited about that. As you see a big pop before earnings, now we're starting to retreat. That can be understood with this overextended move on this chart of JOBY, taking it from $6.42 in May all the way up over $20. Huge move, impressive. But like I said on the other chart with ANET and SNAP, well, whenever you have sharp moves up, they're met with sharp moves downward. So be anticipating price to come down here to this first major level of support, 1534, followed by 1336. Next up, we've got HIMS. You see HIMS here has fallen 7.91% today, but notice where it did catch support right here on this inclining trend line to close the day. Very close to it though. But notice we've got 1, 2, 3, 4, 5 candles from this pivot high moving price down on the charts. That tells me the selling pressure is likely not over yet. I'll be looking at 47.20 tomorrow to see if price will stop selling and then return to some upward movement, potentially retest this trend line, and then maybe even retesting this at 57.71. First step first, let's get the bounce and support here at 47.20 in the coming days of trading. Lastly, we got Shopify. Shopify here, you see here reported double beat on earnings, up 20% on EPS and almost 5% on revenue. Great breakout for this, but look at this nasty fall that Shop has experienced over the past couple of years. This was one of the darling stocks going through COVID. Look at that mammoth push up, online ordering, e-commerce. That was the rave for people not going out and about and shopping. Then it fell off a cliff, guys. Again, and this is a great example. Rapid move up, rapid decline. So now we've worked our way back up, finally starting to push back, getting above this declining trend line. Great breakout there for Shopify. That next then provides us the resistance at 158.89 as the next potential stop for Shopify, followed by all-time highs at 176.29. These areas are not far away considering this mammoth 21% surge today. Anytime we do have a big surge like that, be prepared for pullbacks too. And it still is healthy if a stock does pull back because it gains momentum, providing opportunities too for investors that aren't in the stock to get into it. That support level where you should sit by and wait for is at 135.96. All right, guys, we have earnings today with APP, IonQ, DraftKings, and Dash. So a lot of activity. Earnings season, so much fun, guys. So the volatility is still providing opportunities for day trades and profit. All right, that wraps up Trading the Close. I'll be back tomorrow. Look forward to seeing you then. Until then, I'll see you on the charts. Take care, everybody.